All right, here we are. It should be live. Let's see. There we go. Hey guys. Good morning. Yeah, I'll keep these glasses on for now. Good morning, guys. It's 10/18/21. Today's Steven's birthday. I had a lot of alcohol last night, and so it's hard to stand up straight right now. But that's a different note. How you guys doing? How was your weekend? Let me put the chat over here. Hey Kevin. Hey Caesar. Yeah, my weekend was great. Did you talk with the cute girl from the dispensary? Did I? I went into the line, and then there was another cute girl, and like once I told cute girl B that I was looking for cute girl A, cute girl B just started trying to focus everything towards her, and it was kind of fun watching that process. So I just kept talking about how great cute girl A was, just to watch her cringe. But everyone had a good time, and so that was fun. What was I say? Yeah, look back to this morning dispensary, wheat dispensary, lol. Yeah, this was a story back from like 3, maybe 2 streams ago. What am I doing? Oh, market. There we go. So it's already open too. I don't see anything worth trading at this point. At least not hitting like a single or a double. Only scalping kind of things. But what am I doing? Oh, good news. If I go to StockCraft, the new data feed just approved this morning. So, let's see if we notice a noticeable difference. Whoa, what is this percent? Why is this so high? Is this real? In XTD. In XTD. Huh. Why is that being tracked as a 700%? That's a lot of volume. Hold on. 32 million float. 8. Hold on. Maybe I just messed up my scanner or something. Sorry guys. I'm like slightly hungover. I'm full of so much mousse cake or like fudge. And you already know I got enough chocolate to me in the first place. So I need to calm down. Actually, I'm gonna do it again in like 5 days. But like, at least the thought that counts in moderation. It's a journey. Okay. But how did this go up 800%? And why can't I see it? Let's do 1 year, 1 day. Okay, let's compare the charts. Oh, it must be a reverse split. Okay, 4K additional. So, well, it's not important. Let's see what you guys are saying. Let's put this over here so we can see this chat. Okay. Oh, reverse split. Okay, cool. Not much alcohol, but on my weekend, but it was good overall. Okay, that's good. Just be nice to be in call then LOL. It was legalized in Ohio. Oh, we're in California now, and so it's illegal everywhere. And that has its pros and cons. Like I say that because like you see some drivers, you just know that they're not all there. Let's see. Yeah, but reverse split. Yeah. When it comes to reverse splits, I'm let's just see what my notes say when it comes to reverse splits. I should probably put that off to the side. because I know I had some type of theory when it came to reverse splits. And, you know, when you make any type of trading theory, the only way to test it is, you know, systematically. And last time I had one, and here it is. I'll bring it up now. Open in a new window. I always block OBS and then the YouTube. I need to master these overlays, and then I'll be powerful beyond measure. I'll be like what's his name? He like snaps his fingers and everyone in the world dies, or at least half of them. Big bald Thanos. Yeah, there you go. Man, if my trading ego could become Thanos, it'd be over for everybody. Like if we could just have our egos lead the way. Now, what was I say? Oh, the note. So let's see. Oh, I even had a little disclaimer. That's hilarious. This is my raw understanding of reverse split that happened today on NSPR. I wonder if I, you know, just because it's me, I want to see if I even won that trade on ESPR. Let's see. Kinfo. Whoa. Too far. Log in. To NSPR. So trades. Well, I could check the date on here. That'll make things faster. So this is September 16th. What was I looking at? September 16th. Wait, September is the 9th month. So NSPR. I don't see anything in September. Oh, that must have been the last time I updated it. I don't even remember that. Man. Hey, at least you know, past Dontez got me. Doing some due diligence. He probably predicted that like I'd be in this moment. Who knows? But that's a lot of AMC and GME, but my dude, like what are you doing? I just went over hundreds. Whoa, what are you doing? Okay. I don't think this is the most effective measure. Oh, here we go. NSPR. Yeah, I lost 5%. So that's a healthy risk to lose. I wonder what pattern I was trading. Oh, because there was a reverse split. It went from 50 cents to $5, and then, oh, I think I broke something. All right, let me run away before I get caught. Okay, there we go. What am I doing? Let me see what the chat's saying. So, NXTD 1 to 10 reverse split is called 3 or 4 hours behind East Coast? Question mark. Okay, it was a 1 to 10 reverse split on NXTD. That's what I got. And the other guy is Cali 3 or 4 hours behind East Coast. Oh, 3 hours. Yeah, 3 hours. And I can't ever remember. I try to put I put my phone on Eastern time and I put my streaming setup on Eastern time. But my gaming setup, laptop, and like that stuff, that's all set for Pacific time. Because, you know, I'm trying to keep everything market related in like one area. And then there's a lot of times where like, you know, you got to go to the bathroom, you got to go somewhere and you're still in a position. And so like, then I'm on market time. And so it reminds me similar to that idea of, it's a song out there. It's like one for the money, one for the miscellaneous opportunity, or like, I don't know. One for playtime. There we go. Now, I can't ever remember. 427.21 NSPR, 1 to 15 reverse split. Okay, cool. You know, let me just put that in there because it might be in here too. Yeah. It's like usually when I make these notes, I take them in a way where I plan to use at least 3% of them and just bring it into the future. So I just write whatever comes to my mind. So one 1 to 15 reverse split. Yeah, that's pretty much it. So let's see what this says. Reverse. This is my raw understanding of reverse split. I took a 400 loss. When they stock reverse split, all the numbers are inflated to a point where everything gives you dopamine and FOMO. Okay, I'm really giving my perspective. When you do calculations and stuff, put them in the perspective, you have to find resistances that are in the past. However, the neutralized area is something different after. Okay, I do remember this. After a reverse split, the neutralized area, it does change. And then you have to calculate the amount of percentage or range created at a different place. And the thing is, I remember getting trapped. Like after the reverse split happened, the stock built from 1 because when you see penny stocks, you know, all of them, when they go towards 1, there's a very obvious manipulation to keep them above 1 because like they'll get eventually delisted from the NASDAQ if they go below 1. So the neutralized area automatically becomes like $1, and then they have to build from that before they go into intraday if they do a reverse split overnight. I remember something like vaguely like that. And so I started like coming up with like all the like very rough knowledge I had on like supply and demand and like stuff Steven would talk about. It's not even creating. Yeah. So it's not even creating range, tradable range. The only thing usable is resistance, volume estimate, averages, you know, from your trading data. If the resistance held, you can expect a 10 to 15% push from its peak and resistance. Okay, I think that's me just talking about a fake out. If it's like 10 to 15% push from its peak and resistance and not tradable. Okay, so is that like a scalping strategy I was talking about? No, not tradable. We aiming for 30% each day. Okay, yeah. So I was basically saying there wasn't enough risk reward, or it had to be like a very ideal or strict criteria to aim for it. 30% each day. Think supply and demand. Reverse split add supply. Hey, yeah, it took that's cool. Reverse splits add supply, according to past Dontez. High supply causes low prices. I know how that cycle goes. Yeah. If anybody doesn't know what I'm talking about, when you're in the Freedom Challenge, I don't think you have to be just in the Freedom Challenge. But basically, they give you that little template of how supply and demand works, and how in one case, if you have too much supply, you know, the price is going to go down because we have too much supply, and which means that's a problem for the supplier. And so he wants to like take some of those off his hands. So he's going to lower the price so more people can come in, and that's demand. And then it gets to a point where, you know, we don't have high supply anymore. We have like a moderate amount, or we have low amount. And so that sense of scarcity means we want to add a higher price. And when we get to the point where like the price is too high, and then like we only have a few on our hand, and the price is like, you know, way too high, people are going to stop coming to us, and the demand is going to drop. When that demand drops, it's going to bring in more supply. And then you just keep running that cycle over and over again. And if you can basically put it in a, not schematic, what do you call this? But like in this type of visual, not vision board, like some type of visual like this, you can replace like S3 with when supply is gained. Like if you go to the bottom, it says quantity. You can replace like S3 with like a reverse split. And then you can say S1 is like normal trading with like normal influences in terms of like factors, pattern criteria, news, and stuff like that. But with those strong news that mess with the float, it'd be reverse split and like a, what do you call that, merger, earnings winner, and like all those other things that would either increase or decrease the supply in like a very short amount of time. And then that's where you'll have like the base of your creative ideas for risk management and what do you call that? if you wanted to create a pattern, you'd have to like understand that very loosely. This track. Okay, so reverse splits attracts to a lot of volume because it's a very obvious thing. And so I think I was trying to create some type of strategy from that. But I had to, yeah. Let's go back to what they were saying. All right. Oh, nobody saying anything. So in reality, I was trying to trade in SPR at negative range. Trade it today. Oh yeah, I know why. Using just resistances on a fresh chart. Yeah, when it comes to a fresh chart, there's always advantages that you can take. And during this moment, I didn't have a lot of self-control, so I was hitting anything that just seemed safe with like a resistance. Because when you have like a fresh chart, but then there's a lot of resistance, you can treat it like a bounce short. If you think the neutralized area is like really low compared to its current price, and then you're trying to use that resistance to like kind of bounce off of it and then ride it all the way down to how do I explain it? It's basically like bounce short and overextended gap down, except you have to calculate the range of the past few days. Like, it's not really important. That's not the strongest pattern. That's just how you have to have some type of understanding to realize that you're wrong. And then like these are the type of detailed notes you'll have to make. And you can see down here this little thing was created by Topher in our chat room. And so shout out to Topher. I even did things I think I did good and things I think I did bad. I could easily add to like this list on both sides now. But other than that, let's see if there's a play that came up at all in these next 15 minutes. I was just like, honestly, I'm ready to trade. I really wanted to like do a big play. Hold on, like this $2 stack. I'm not really that interested in it. Yeah, I have to get to like 280. Yeah, but what am I doing? I remember what we're doing. New data just came in, so we're about to test it. And now, if we're testing data, we're going to see like its refresh rate and stuff and see if it links to the symbol info. Or at least that's how I'm gonna test it for now. Because the strategy builder will probably bring in different data. What do you call that? Like from the provider. That's how always. That's gonna be different from what comes into the platform. And so I had to what do you call it? I want something like super volatile. What's something that's always volatile? Let's go like SP. It'd be like a penny stock. I'm pretty sure we could use the IO as an example and see if it updates pretty frequently. Wait, I already brought it up. See you guys. I'm a mess right now. Let's do 5 days, 2 minutes. Let's see if it refreshes pretty well. Let's go first green. Before anything else, load this workspace because this format is killing me. Okay, that's better. Okay, see, this one moves like very accurately with the 0.01. I really like this because those small amounts, it can be a little scary, but it gives you a little more detail when it comes to like reading the price action. it has a lot of noise, but if you can just try to weather most of the noise, you'll be fine. Now with this one, there's always random fake candles and glitches and stuff like that. And this one takes out a lot of the noise, but at the same time, it gives a certain like faith aspect, and like, you know, it's like a love-hate relationship. But if I constantly refresh it, which is kind of annoying, it actually didn't even update. Hold on. Maybe they're different sized candles. Oh yeah, this is 1 minute candle. Okay. Let's go to 5.2. Okay, now it's it. Same area. Let's do 5 minutes. Oh, it is 5 minutes. Alright, I don't see anything noticeable in terms of changes right now. It's pretty much the same. The symbol info is still moving like a snail. I could use yeah, see, if I tried it now, I'd be like 3 cents behind. Oh yeah. Let's see what the chat's doing. No, let's see. WTRH is breaking out. It might turn into a multi-day runner. Ooh, WTRH. I think in the past couple months we've seen that. WTRH. Yeah, we've seen this do something. Wait a second. I know I've seen this. Where? Below $1. Oh, hold on. This might have been on one of my... What? No, I remember this ticker. Hold on. 3 years. Let's try. Oh, that was back in quarantine. Wow. Okay. So let's see if we can use this. He said multi-day breakout is what he said. Let's see. $1.50. Yeah, we have a lot of pressure from, you know, trying to keep it above $1. 14 million right now. Half an hour in. It only has 11% range. So yeah, you know, all shorts, especially since next to 1, are out of the question. But if we're looking at longs though, we're probably looking for something that builds from the bottom and has like a solid support looking area. And I don't see any like strong, consistent volume or like strong catalyst to break past some heavy resistance. Because like the closest thing to like a resistance in terms of consistent resistance would be this area. See. And probably around like 170. Actually, yeah, that's probably what he was talking about. Yeah, 160, 170 area. But how we calculate that much resistance? It's like, think about it. Anything here canceled out most of the things that were found here, like with the amount of volume, but it didn't reach the entire amount of range. And so, you know, that might be. Well, it's not my play. I don't have the statistics for it. Yeah, overall, it's a boring day. Not much to do. I'm gonna ask the support how the data is how could I test it or something? Because this is still stuck at 204. Hold on. Well, I put out 2 new videos today. Or oh, not 2. I have 1 like scheduled to come out next week. So that's fun. What am I doing? Oh, that's the 3-year chart. Let's go back to 1. Oh yeah. That means the other one's too far. it still influences it, just not enough to use it as a heavy weighted factor though. Everything else is like under or not 1,000, under 1,000,000. Yeah, I believe in it. You know, so if this was the first green day, let's say, let's see, it's up 15%. Let's see what 2 days looks like. Okay, yeah, that's pretty cool. Late day spike, which is always like hard to beat down and needs like, you know, consistent beating down. It didn't drop at all. And so that'd be a good, like even if it does go all the way back up, it had to get past that. It's considered weak, but like it's still a support that in that pre-market support. Do I want to just buy and hold this? Let's see, 200 million market cap, 90 million float. It only has 60 million volume. Nah, not worth it. It's like, even if I did set like a risk, what is that, like a 20% or 20 cents risk on a almost $2 stock. And so it's at least 10%. So we're looking at closer to yeah, at least 10%, so about 15%. And the only thing that would make that worth it is if it was like a 2-to-1 and I make like 30 cents on this, which is actually pretty possible if enough volumes generated. And then I wouldn't use the entire support. I'd go slightly up. Yeah, just not an edge for me. Like the deeper you think about something, the more you can make it work. But at one point, it just becomes like too much if you don't have like a very safe core to bet off of, like that's statistically backed, is what I want to say. But what else was I gonna say? Yeah, it's just a boring market at this point. I might just go through old tickers on my watch list and just see when's the next time they're going to become like a bounce short, and you know, and whether they're worthy to be on my watch list still. If you guys have any questions, this would be the time to ask them on these boring days. No, most of the time I just go through like old notes like before. So if you have questions, I can just bring up the notes that are pretty much relevant, I want to say. But in the meantime, let me just look at these. Yeah, like nothing was generated on the way down. Just remember this being a lot more popular before. Well, oh, I think I'm thinking about a different ticker. OP. Doesn't matter. I don't think this is worth being on there anymore. Let's see this. Okay. That's not even that old. All right. Well, still has room to. Oh yeah, that's in the 25s. Even if it does go up there, that's $10 a spread, and then another $10 right here. Oh. I'm pretty sure if they ever went back up, it would need almost twice as much volume. Oh, actually, no, that's a low float. Hold on. What kind of sector are we talking about? Let's see where you at. Where are you? Profile. Industry, vehicle and parts. Okay, that's rare to get up there. Yeah, so that's not worth keeping on our list. GRVI. Okay. Okay, reverse essence. Okay, cool. I remember. Stop it. 3 months. So we remember it was slightly canceled and we were expecting it to go up higher. And then the next couple of days, it just dropped into there. I remember covering around 7. Yeah, like low sevens right before a halt, like 7.21, and I got cheated 20 cents. Okay, I remember. It's always good to go back on the tickers you traded so you can have a vague memory of what pattern you were trading, what kind of lesson you learned from there, to like maximize your gains, minimize your losses, and also recognize the key points at where you can make the max potential profit. Now what am I doing? Yeah, but there's no edge in that right now. The chances of it's coming back up, for it to be pretty much tradable, this will have to go back up to 12. And then we already saw that this required like over 100 million volume to even like push that far up. And that pretty much like took a lot more effort compared to the previous spikes, which means not liquidity is being gained, but like it's going to require a lot more pushing power in the future, similar to how it couldn't get past this one or that one without having this necessary amount of volume. And then even with this amount of volume, it only pushed up to like 930, which shows that it's pretty heavy. And now that it's like so heavy, but it only took half the reward though. There's a lot of ways to look at it. Like all this would be considered some type of consistent resistance. I just don't know how to zoom out anymore. But yeah, it's fine. Yeah, neutralized area is what I'm talking about. Now, what am I doing? Yeah, this isn't needed. There's nothing worth it today. Should I just close the stream early and then get rid of my hangover? Where's the? Oh, we got a question. Can you show us a quick snapshot of what to track on first red day and multi-day runners? I don't know what columns I should have on my spreadsheet. So when you track stats, they're going to all be together, and then you're going to separate them. And then after you separate them, that's where you can start getting into like a specific edge. But in each one of those patterns, there's definitely a maximum potential statistic that you can track. I'll just show you what I was told to track, but I'm still like, I'm working on 2 patterns at a time. And so with multi-day runner and first red day, since they happen so low in frequency, you can get away with like tracking them with your main pattern. What is that? DRV. Let's go here. Yeah, get over there. So let's see. Oh, I think I just saw one. This could help. So this is like one of the templates that we show. I think I remember, other than like our Kickstarter, when you first get into the Freedom Challenge, this to show you what's important when it comes to tracking all your stuff in like one sheet. And there's a YouTube video with Steven Ducks, and he talks about which ones are important to track. And like, I'll just point out the ones that he says is like important in terms of like when you track all the data and how you should loosely track it so they all work together, and then it's easy to separate later. But this is the sheet that you'd go for. I just added my own little things like later in the early stages. Like, see this back in like March, and March and June. But what was I about to say? Yeah, there's date, ticker. You don't necessarily need the sector, but there's always like an edge there. Same thing with the index. Setup is always like, it's good to have if you want to see some type of, differentiation. I don't know what to say. Like some type of way to separate the patterns inside. But you can do this in another way when you go to like the top tick, and you can put it as like a category. And each pattern has its own separate top tick statistic based off of your overall working statistics, as well as like the pattern specific edge. And so like for gap up short, that'd be like the pushing percentage. So you'd start the max profit potential from your rough estimate of the top tick, and then like that's where you'd like to start tracking. So it looked like a high a day before a very specific time, and like these type of strict criterias. But if you go into like a first red day or a multi-day runner, those are ones that are, you're mostly just using the resistance and using the minimum drawback and consolidation and like specific timing compared to that consolidation to create your maximum profit / like know exactly where to put your risk. And that can be averaged, I want to say, at the place where the resistance is, and like it'll help you with tracking that momentum. And so when it comes to like what's important, pretty much date, ticker, sector, setup is kind of preference, but yeah, outstanding, you don't need that. Float, you do need it. Daily volume, no, not really. You will need like total volume, pre-market volume, and let's see, if you're doing like first red day, multi-day runner, you want to get like a idea of the predicted total volume, the amount of float rotations, and so automatically just need the float in the first hour. And you can do that with if you really wanted to get into detail, you can track it specifically. But I get to a point where I want to keep my statistics as low amount of columns as possible, so I can go in here and just like get it done pretty quick. Because one of my things is like, if there's too many columns I have to track for every trade, especially the ones that are like barely ideal, I just stop tracking eventually. And like that's just like a personal thing for me. But if you have the discipline to do it, you can keep going. You can track all this stuff here. But back to what's important. Previous close, that's always good for determining the range. Open, it depends on the pattern whether that's important or not. Because first red day, if you're looking for that specific gap down, the open will be able to tell you from like the higher pre-market to the open how much that gap down was. But you also can just look at it on the chart. But if you wanted to measure that specific gap down, what do you call that? That gap down before pre-market, like I do. Let's go. Well, I'm already on it. Where you at? Yeah, pre-market gap. Pre-market gap fade. Here we go. And so that's something you can track too if you just wanted to know the raw statistics of that. But that's something you can break down later just using basic data. And so like from this high to like here, that's where it's saying, hey, this gap down, what is this, ECOR? Where is it? Yeah, say it gap down 30%. And so that helps me with the statistic for gap up short, where if you lose half of the percentage in the pre-market, it's technically considered untradeable because our criteria is trying to be strict. But it also means that momentum was lost. And you can use the same principles in other tickers, like multi-day runner, first red day, etc. Bounce short, stuff like that. But what am I doing? I got to finish this. So when it comes to like intraday top, See, now this is the one where it's pattern specific, and you also want it to be slightly time specific, because you want to separate like things that happen before 11 o'clock. And so the way you would track this is you put the number specific to, I think this one was a gap up short. And so you'd look for, I'll show you in mine. Where are you at? So these represent the core stats found in like all the tickers at like one time. And so like the basic core stats just go market cap, low, close, previous close, open, high a day, low, previous resistance level, and previous resistant volume. When it comes to previous resistance level, you want to go back to the resistance that you're trying to look at. Let's just find one real quick. I'll just go back to those watch list tickers. So with this one, if we think the resistance is like 7 to 9, and then like we have this little thing over here that's kind of canceled. But if we're trying to like combine the two here, we just take the average between the two and be like, hey, the 7.4 is where the resistance level is. And then once we combine the amount of volume that we think is like left over, then we'll put that over here. And then like that's still a part of the core stats, or just the statistics you can track in the morning. When it comes to like pre-market volume that you have to be there for, like before the market's open to catch that most accurate one, you still want to have that. The total volume tick, this is all the volume collected up to the point of the top tick. And so like that's always helpful no matter what pattern. So let's just look at random spikes again. So 5-day, 2-minute. So up to this high a day spike, you would like when you're watching your position, you'll see how much volume is up to that top tick. And the thing is, we say top tick instead of like, oh, before 12 o'clock or before like whatever other way you can represent the top tick. We don't say that in terms of time, because that's not like a good metric of translation in the market. You want to do it by price action. I think I'd explained that in like a different video, but pretty much like you're tracking all the volume up to this point, and many people do that like slightly different. You know, some can go straight to the 30-minute candle after they see the time was, you know, 9:50, and they're just like, oh, that's almost 20 minutes into the market. So they go to like the 15-minute chart, and they're just like, oh, okay, so you know, it has 40 million volume, like intraday was built up to that time, plus whatever it was in the market. And like they'll add that to their to like the total volume up to the top tick. And then you go over, and that's where the category for the top tick happens. And so this is the maximum top tick that you're looking for when you're considering the criteria and soft and hard limits of the pattern. And so if the top tick for what did we pull up? GRV, which I think it was a bounce short before, it was like a very minimum bounce short, if I remember right. Like barely met the minimum criteria. Yeah, because it opened at like, so this was like 5, and then we wanted to go to 10, and so it was a 70%. Yeah, that's about right. Yeah, 70%. Is it 70%? Yeah, 70% bounce short. And then like it went up to closer to like 80, 90%. But in terms of like our soft limit and hard limit, the soft limit will be like 50%, because that's the basic minimum criteria for the pattern. And then the hard limit would be like, we're looking for a minimum on bounce short. It's like 100% plus resistance. And so we'd be looking for that 10, and we'd track it as 10. And what do you call it? This category top tick would be 10, and then the volume up to the top tick. And then you do the same thing with the bottom. like in terms of how much reward is in the pattern in general. And so you'll just have the ideal top, ideal bottom, and then you have your actual exit and entry. And then you can do that with all the patterns, because like, since these are all pattern specific, each time it's going to come up with like some ridiculous number that's not related to the other ticker. But this helps you categorize all the stocks within that specific market cap and float. And that has its own edge to it, because since the penny stock market doesn't follow the rest of the market, you have to make some type of sense of it. And then the only way to do that is with like mass data, and then finding things that have even like the smallest amount of correlation that you can take advantage of. Now, what was I doing? Oh, same thing with current day volume. Like, that's different from like the total volume before up to the spike. And you're going to have to just very loosely track that based off of what do you think is going to be important in the future. And at the end of the day, you just want to make as less columns for yourself as possible so you can stay consistent with tracking it. Because there's some scenarios where, like, you know, a gap up short doesn't have resistance level. So like, what are you going to do? What are you going to put in this column? And like, you know, that's, you can put whatever you want. Like, some people put 1, but that might mess up your data. Some people put like a dash or equal sign. And I saw someone like put in blank, but I still haven't figured that out yet. Lowest point intraday. And then you also can keep like little notes up here just to remind you of what these mean. And yeah, that's pretty much how you calculate multi-day runner in terms of putting it all in a specific sheet. But when it comes to like what's important, what am I say? We're multi-day runner. So when it comes to like what's important on a multi-day runner, all you really need to know is there's a resistance, and then there's a certain amount of like float rotations and strength of a spike that can be measured using those basic statistics that we calculated before. And then they'll all be listed here, and you'll take another level of prediction based off of what categories they fell in. And then that goes into, you know, the market cap and float thesis again. So hopefully that helps. Again, you can always do a little bit more, get a little extra, and just put in like, you know, type 1, type 2, type 3, type 4 charts for your like gap up shorts and stuff. You can always get like outstanding. If you really wanted to, like, you know, find an edge close to, what do you call it? Like pre-market, you can really start tracking a lot more stuff pre-market. Volume, you could do a lot more with volume, but we're not. Let's see, total volume up to the top tick. Yeah, same as before. You can do it like a lot more. I try to just keep it as simple as possible. Like, look at this. This chart has like a lot more color versus my gray and black ones. It just says something about my monotone personality, right? All right, back to what Jonathan was saying. You can go to the NASDAQ website and they'll give you the PM info as long as you get it on the same day they have it. Yeah, there's a lot of data websites out there like that'll give you accurate data as well as like templates and other stuff to use that. It's just the way I see it. If you don't track your own data like manually, you're losing the opportunity. And the opportunity is to like basically engrave canals and synapse and like all these connections in your brain to make it easier for you to have like a temporary photographic memory based off of like emotionally charged experiences that directly link right back to your heart. And so you're just like, oh, every time like the ticker's doing stuff. And the thing is, it sounds really hard to believe, but like once you see Steven do it for so many times over years, and then like, you know, you do it a couple times by mistake, you're just like, oh, I see what he's talking about, but I don't think that's healthy. But you know, it's practical if you know how to control it. You know, you stay healthy enough to, yeah, you know where I'm getting. There's a lot of emotional traders out there. But what was I say? I know there was one stock tracker. There was one website that I was curious about. Yeah, I think it was a stock tracker, and there's some other stuff where like they'll give you free data, and like that's pretty cool to have. But if I did use that, I'd use it as like a template, or like a reference, or like moving average compared to like the data that I track, just to see if they're in a similar boat. And then I test like the health of my strategy or the health of my statistics by comparing myself to other people's like statistics. At least that's how I would go about it. But at the end of the day, like your statistics and their statistics are only going to be like rough estimates. And so it doesn't really matter about the super amount of accuracy of them. You just want to see if they're like in the right ballpark, so you can get the concept down, and then, you know, get the meat of the move, like either way that you're like going, short or long. But what do you call it? I keep going back to FinViz because I really like when they bring up their statistics, like during backtest. That's pretty cool. But what am I doing? Yeah, I used to come in here a lot and look through like hundreds of tickers just to like get used to what does a multi-day runner look like the first day, the second day, the third day, and what do you call it? Since these are like distilled charts, it was always like a little bit harder to like see them. But once you look for specific things like relative to itself, you'll start to see patterns a lot easier, and then you can like, you know, get really specific with it in terms of like what market cap and like price range and stuff like that. It only got confusing when I started going to different exchanges, and so I stuck to the fundamentals and technicals. The descriptive wasn't that important. Oh no, technicals and descriptive. Fundamentals wasn't the one that was important. Because it's penny stocks. So yeah, that's an edge, or not an edge. That's something to play with. Because at the end of the day, like the first year, you're just trying to create a technique that becomes like stable, and then from that stable technique, then you can go into other techniques. But you know, you have to make one to mastery first before you even. He said, "Hi, I'm back. Hi all." But like you have to have it to a certain amount of mastery before you should start your next pattern, because at the end of the day, you want to have the strongest foundation and then a life-saving risk management, so you don't blow up your account. And so it's always good to have perspective of what is possible. And what helps with that is, you know, talking to other people, talking to other traders, researching pretty consistently, like at least like 3 hours a day. But if you're really trying to go hardcore, you don't have to go like 10 hours a day like Steven. You could do like, you know, yeah, 3 to 4 is fine. Like just make sure they're quality, and quality in terms of like, hey, you're looking after a guru's like a recap, or webinars, even like a few of the articles out there. The way you don't want to do this is, you don't want to just go straight to Google and just be like, how do I trade? What's some like some troll stuff I'd see, like, oh, how do I trade first red day, and then, you know, people come up with their long articles of like, oh, this is how I. Wow, okay, what am I doing? But like they'll go into the video and like they'll never actually tell you what's important in the first red day. Like that was one of the things like I did when I first started. Like I'll just go in there. I'm just like, you know what? Let's see what the internet says. And it's always good to know what they say because like there's a lot of people out there that actually listen to that. And so like when you have an idea of what they might actually do, it's a little funny. But you rather have something that, you know, has been statistically proven. I can't tell if I see Steven right there. I do. Okay. See, I got the ADAR. Now I see an Asian from like 200 yards away. Okay. I don't know how that should be taken, but you know, tigers. Okay. But yeah, I'm like one of his biggest fans, so I have to zoom in on this like in a creepy way. How do you do that? Control Shift Plus. Oh, is that Superman? Sykes, Good, Bowen. So I remember in the first like video, you want to know who the players are, like who are the ones that are like leading the chat rooms, leading the market, running the hedge funds. Oh, then you got Owens or Triforce Trader. I think that's a camera guy or Father Time. You never know. But let's go to the questions before I get in trouble. I couldn't find the stream. Wrong date. Haha. How to trade cup and handle. Breakout. LOL. Okay, so cup and handle. That's simply a fake out, right? I remember it. I think this is it right here. Well, this one didn't break out, but basically that's the general idea. It's like it builds a handle, and then the cup is it coming back up on the back end and then breaking the amount of resistance created in the first part. And so, what do you call it? Do I have a note on cup and handle? Let's see. Cup and handle. Oh, I do. Huh. All right, let's try this. So, where you at? Open a new window. All right, so let me make sure to put the chat back up. There you go. So, I was talking about a swing strategy or something. Where was the cup and handle mentioned? I thought it come up. Oh, okay. I know what this is. This is my notes from that swing trading book. Yeah, that's not really helpful. I even put in content potential. Hold on, there actually might be something in here. Japanese can 4 cycles, heavy run. Okay, 4 cycles: expansion, distribution, accumulation, and contraction. Those are the type of cycles in the SEC when it comes to like the cycles in the market. I loosely remember this. Okay, cup and handle right here. This is one of the patterns that like it's textbook. This is marked to fail at like this point. And I think I drew a little picture like just to remind myself what cup and handle was, just so I can get an idea of what was popular or like what were the basic principles of why this was a thing. And so like, you know, you got range gain and then you don't know why it came back. It could be like some type of resistance in the past, or it could be like this range gain was just so much that it just had to come down naturally. Like we've seen enough meme stocks like that. But what was I say? Yeah, like so you come up, it goes all the way down, and this is probably like around that 50% mark because a lot of people like to buy around 50%, and slightly above or slightly below. It really just depends on the market cap and float. But like when it comes back up, there has to be enough liquidity gained on that back end. Like could be like a news. It could be like just a low float in general, or like, you know, this was like a fake out, or what do you call it? The reason that a double test is because most people weren't convinced on the front end, and there's so many factors that could just not make you convinced that could like lead this back up. But if you're looking for like a specific breakout, like I think it was Caesar, like Caesar was talking about, you're looking for some either price action factor or like a volatility factor that is going to exceed not only the well, there's no consolidation here, but like whatever kind of resistance created around that area. And that's actually pretty easy to like get like a fake out, like this point times like 5% or like extra 10%. But if you're looking for a breakout on it, I think it would be time specific, similar to gap up short, like right around 130 to like 230. If you don't see a certain amount of like liquidity gain in terms of density to create almost like a support to bounce off of, and it doesn't double from the bottom, then it's not really worth the trade. And so like if you took a long on this, you would think, oh, I'm going to take a long at 50%. That's a big faith kind of aspect, and you want to eliminate that as much as possible in trading. But if you did do that, like you take like partial position, like 1/5 or something down here, and then like you wait for some type of confirmation before it like comes back up. And so like I said it before, like you'll test this area, and when it dips below that area and you see it's keeping like higher lows, then that will be the time for you to go in. And so you want to have like enough time for more liquidity to be like added, especially if it's like, a lot of shorts are trapped here. And so, when they get squeezed out, it's going to be a 20% push. And now there's specific things that only short sellers will be looking for. And so, in my case, if it went up to like that 75% area from like the panic, that's like one stop loss trigger for like most of the shorts. And so like, a lot of them are getting out. But then those people with like large size accounts, they're going to keep their risk tight, but they're only going to keep it like 5% tight. And so when it does that little fake out right there, they're still holding on because they have enough experience. They're patient. But if there was enough volume that made it jump from like this area to like slightly above, that's enough to scare most of the shorts out. And then that's the thing is, you only need to scare most of the shorts to get that that little extra oomph that you need. And then once that's created, there's going to be a drawback because there's going to be a panic. And then like, if there's like a lot of people in there, the news travels pretty slow. It's going to go sideways for a while. And then if that doesn't happen, the alternative is it just pulls back like a tiny bit, panics a little bit, has a up or high, and then you buy at that point. Or like technically you're averaging your early position plus that, and then you're riding it to that rest of that 20% push. And then that 20% push is going to have its own momentum to it. It's going to slowly, it really depends on the time. If you're like 230, it might even squeeze even more into the next day. And you know how that goes. If it closes strong at the end of the day, it really just depends on the relationship between like the volume and market cap and float, whether it goes to like sideways price action or, opens up even higher. But then you have to run the risk of like holding it overnight, like whether it's like offering, because it's like this is the type of patterns that people will do offerings just because it'll go up like a lot, and they'll know too many people are trapped overnight, and then they'll pull that offering overnight, and then you'll end up like Steven in his first that's the kind of idea you want to go for though. Like you'll run each of the scenarios of where this can go right and go wrong. And with cup and handle, just at the midway point, there's already like 3, maybe 4 scenarios I could think of. Then when it gets back up to the testing point, there's another 3 that I can think of. Hopefully that helps. But we're over time, and nothing to do in the market right now. Let's see if there's anything. Nothing looking attractive at this point. Might look at something in the back end to see if it's a play tomorrow. But other than that, thanks for watching, guys, and we'll see you tomorrow, 9:30. Let's hopefully there's a trade. But thanks for coming out, guys. Have a good day. And we'll leave it at the sappy screen. Where is my sappy screen? There it is. Peace. Rest well.